The team at Technology for Hotels knows how busy you are, so we've created this concise briefing to keep you up to date on key happenings in the hotel industry. Let's dive in. Today, we're diving deep into the hotel landscape. We'll be looking at significant new openings, some major acquisitions reshaping portfolios, crucial industry trends, key leadership moves, and a really important discussion on AI in the workplace. Our mission here is basically to pull out the most vital info, give you a shortcut to staying informed.
Absolutely. And for industry leaders like yourself, keeping up with these shifts isn't just about, well, knowing what's happening. It's really about navigating growth, spotting those operational hurdles, and frankly, identifying future opportunities. What we'll see, I think, is how interconnected all these pieces are. It really signals where the market's heading.
Okay, let's start with the expansion side. The pace is rapid, and some fascinating new concepts are popping up. We're
Yeah.
seeing some really telling plays. Take Marriott International, their recent Courtyard by Marriott debut in Darwin. It's more than just another opening. It actually hits three significant milestones for them.
Right. It's their first hotel in the Northern Territory, which means they now have a presence in every Australian state and territory. That's huge.
Exactly. And interestingly, it's their first time partnering with a white label operator, Trilogy Hotels, in the ANZP region. That's Australia, New Zealand, and the Pacific.
Uh-huh. And this hotel, the 186-room one owned by DCOH, it seems geared for both corporate and leisure guests. They've got self-check-in tech, a revamped fitness center, major upgrades planned through 2027, too.
It pushes Marriott's ANZP portfolio up to 35 properties now. It really underlines their strategy of, building strong local partnerships.
That's a great example of global brands tapping into local know-how. And you see this blend elsewhere too, international luxury mixing with local charm. Like look at AVC's Hotel HQ in Underwood. It just reopened after big renovations. They kept the local feel but gave it a fresh look. Revamped bistro, alfresco dining, upgraded sports bar, even two kids zones.
That focus on the localized experience is definitely key. And speaking of global brands with local flavor, Japan's seeing a lot of action. Fairmont Tokyo just opened its first property there. Central location, views of Tokyo Tower and the Bay. And they seem to be genuinely blending tradition and innovation. 7 dining venues, even a tiny 6-seat sushi counter and a hidden listening bar. Plus, huge event spaces.
Japan is definitely a hotspot. World Brands Collection Hotels and Resorts, or WBC, they're making some aggressive moves, partnering with big names like Six Senses and Banyan Tree. They've recently opened Six Senses Kyoto, Banyan Tree Hikashiyama Kyoto this year, Gari Nijo Castle Kyoto last year.
Wow, quite the lineup already.
And there's more coming. Banyan Tree and Hakone Ashinoko, Hakuba, Toba, and Ises. Plus, 2 new Six Senses resorts in Hakone-gora and Hokkaido Niseko, both expected by 2029. WBC's strategy is pretty clear. Blend that international luxury standard with authentic local culture.
And Hilton's not sitting back either, especially on the luxury front. The Waldorf Astoria Bali in Nusa Dua is slated for a late 2027 opening. They're developing it with PT Balawana Perkasa, beachfront, villas, suites, multiple dining spots including the Ledge by Dave Pint, big wellness facilities. It ticks all the luxury boxes.
And this fits right into Hilton's broader Asia-Pacific luxury strategy, doesn't it? They've got other Waldorf Astorias planned for Kuala Lumpur, Sydney, Shanghai, Tokyo, Xi'an, Hanoi. Complementing their Conrad and LXR brands, it's a real full-court press on high-end hospitality.
Definitely. But it's not just luxury. Strategic moves are happening in accessible markets too. Radisson, for instance, is strengthening its Thai presence with the Radisson Hotel Don Mueang Bangkok.
Right near the airport. Smart location.
Targeting business and leisure, it blends modern comfort with Thai elements, has the cabin dining, rooftop pool, meeting facilities. It's a solid play for a key urban hub like Bangkok.
Makes sense. Radisson's strategy seems focused on those key city locations.
Okay, and here's where it gets really interesting on the brand front. Minor Hotels. They just launched 4 new brands.
4? Wow, that's ambitious.
It is. It's part of their plan to hit 850 properties by 2027. They're clearly diversifying across the whole spectrum. So you've got the Wolseley Hotels for luxury British elegance, Minor Reserve Collection, a luxury soft brand, Colbert Collection, a premium soft brand focused on culinary, and I Stay Hotels, which is select service, budget, and tech-enabled.
So they're covering everything from budget to absolute luxury, plus diving into the soft brand space. That's a major strategic shift.
Definitely a comprehensive play to capture pretty much every market segment.
Okay, so connecting these openings to the bigger picture. Let's talk acquisitions and investments. These deals really tell us a lot about shifts in market value, strategic positioning, maybe even evolving asset types. Take Fairmont Hotels International buying the Sky Suites Sydney serviced apartment building and the mall downstairs. Fairmont already has a decent footprint, around 40 hotels, 17,500 rooms across Asia, and another hotel in Sydney.
So this isn't just adding rooms.
No, I think it's more strategic. Consolidation, yes, but also expanding into that profitable service department model. It diversifies their Sydney offering.
Makes sense. And we're seeing smart partnerships form too, like Panache Hotel Group,
Right.
the ones who revitalize underperforming hotels. They've teamed up with THSA Hotel Advisors.
Ah, yes, PHG, their franchise model.
Exactly. They want to accelerate growth, double their portfolio by late 2026, move into new markets. THSA is there to provide strategic support, deal structuring, market analysis, basically leveraging PHG's track record.
It's a smart way to scale, but what about repurposing assets? That's becoming a theme too, isn't it?
It seems so. Look at Fraser Suites Perth, sold for $105 million to the WA government's Department of Communities.
Right, and they're converting the hotel and the office tower next door into long-stay housing.
Yeah, to tackle Perth's housing shortage. An off-market deal done by JLL. It's a strong signal that hotel assets are being seen as, well, versatile tools for broader needs, like housing.
Definitely something to watch. Elsewhere, Ala Land, Inc. acquired New World Hotel Makati. Straightforward move to strengthen their presence in a key business district. Operations continue, team stays, supports their urban growth strategy.
And Marriott's AC Hotels brand is expanding. They've signed a deal with KS Hotels and Resorts to bring AC to the Gold Coast.
First one in Queensland.
First in Queensland, second in Australia. It'll be a renovation of the current Vibe Gold Coast, opening mid-2026. A 202-room upscale lifestyle hotel. Fits right into Marriott's goal of 50 hotels in the ANZP region by 2027.
Seems like everyone's got ambitious growth targets. What about Bangkok? Any more news there?
Yes, Six Senses is opening in 2028 in the Silom District, part of the Hadai mixed-use development, partnering with Narai Hospitality Group.
Six Senses means a big focus on wellness sustainability.
Exactly. Around 100 rooms, wellness facilities, rooftop pool, spa. They're aiming for ELIT and Well Gold certifications. Sustainable design by Heatherwick Studio, interiors by Byar Studio and Joyce Wang. Very high-end, very wellness-focused.
And speaking of acquisitions with a transformation angle, Mandala Hotels and Resorts bought the Mercure Clear Mountain Retreat in Moreton Bay. Big property, 20 hectares.
Right. Brings their asset base over $250 million across Australia. And their plan? Transform it into a world-class luxury retreat under a new premium brand. Another signal towards higher-tier, experience-driven assets.
Interesting. And in Japan, Balluna Co. picked up 2 hot spring resorts, Hotel Zuho and Akyu Grand Hotel from Karakami Hotels and Resorts, supporting their expansion in Japan's regional hospitality, likely betting on domestic tourism strength.
And finally, on the luxury development front, Asset World Corp AWC has started construction on the Ritz-Carlton Bangkok, the Riverside, set to open in 2028.
That'll be the second Ritz-Carlton in the city.
Yep, 168 keys located at the historic long 1919 Riverside Heritage Destination. Shows a renewed focus on those prime Riverside spots.
Okay, we've covered a lot of individual moves. Let's zoom out now. What are the broader industry trends shaping the whole landscape? What's the data telling us? Well, a Marriott study on luxury travel in Asia-Pacific is quite revealing. There's a definite shift towards purpose, well-being, personal connection.
So less flash, more substance.
Kind of. High net worth travelers are actually spending more per trip, but traveling less often.
Yeah.
They're zeroing in on curated, wellness-led experiences, high demand for nature escapes, familiar places, and trusted hotel brands.
And any new traveler types emerging.
Yeah, the study highlights solo parents traveling with kids, Gen Z seeking meaningful adventure, and people combining holidays with business or even investment opportunities. It's less about just luxury, more about intentionality.
That intentionality seems to be driving strong performance in some markets, like Fiji.
Absolutely. The Fiji hotel market is showing really robust growth. Visitor numbers could top 1 million this year, tourism earnings hitting FJD $2.54 billion. Hotel occupancy and ADR, the average daily rate, are above pre-pandemic levels, particularly in places like the Coral Coast, Maminuka, and Nadi.
But supply is limited.
All right, the pipeline is modest. So new luxury developments are pretty essential to meet demand. And investor interest is high, helped by good market conditions and government incentives.
Now, Scott Boys, the CEO of Trilogy Hotels, he gave an interesting outlook on the Australasian market. He sees it as resilient, but varied.
Yeah, Sydney's leading in occupancy and RevPAR revenue per available room, but Melbourne and Hobart, they're facing headwinds from rising supply and maybe softening demand.
New Zealand.
Mixed bag. Queenstown and Rotorua are doing well thanks to international travel bouncing back. Auckland and Wellington, though, more mixed results.
What are the key trends he pointed out?
Growing demand for eco-certified and experience-driven places, strong interest in premium and branded residences, and of course the importance of tech and getting stakeholders aligned. Crucially, he also noted that high construction costs are limiting new builds. This means existing hotels, especially in markets where it's hard to build, are becoming more valuable.
That fits with what we heard about acquisitions. Now, looking wider, Payday's Asia-Pacific visitor forecasts. They seem quite bullish, despite global uncertainty.
They are. Projecting 801 million international arrivals by 2027, up significantly from 2025. China, the USA, and Turkey are the top inbound markets. Interestingly, Turkey and Mongolia might even exceed pre-pandemic levels soon.
And the key trends driving this.
Continued rise of wellness tourism, no surprise there, the huge influence of digital and travel choices, and, significantly, a shifting source market seeing strong growth from India, the UK, and Russia. It's clear that policy changes, currency fluctuations, public sentiment, they're all actively reshaping travel patterns.
Okay, let's drill down into Southeast Asia specifically. The picture there seems to be changing too.
Yeah, growth seems to be cooling a bit in the traditional powerhouses like Thailand and Singapore. But emerging cities like Phnom Penh, Manila, Hanoi, they're showing stronger year-on-year performance.
And RevPAR, still rising.
It is, but the gains are now mostly rate-driven, not occupancy-driven. That's an important shift. Costs per occupied room are also up, especially in things like golf operations up nearly 28% and labor.
But wellness is still a bright spot.
Definitely. Health club revenues are growing, tied directly to those wellness trends. Profitability overall is strongest in luxury, select service, full service, and extended stay. Lifestyle properties seem to be facing margin pressure from rising costs, so Southeast Asia is still a top performer in APAC, but there are new winners emerging. Investors and operators need to reassess where the best opportunities lie now.
That idea of specialized segments performing well brings us to luxury lodges in Australia and New Zealand. Yeah. CBRE research suggests they're doing exceptionally well.
They're at the top-performing hotel segment, actually, driven by that high-net-worth demand for exclusive, unique experiences. Get this. Total revenue per occupied room is up 59% since 2018. Profit margins up 54%. We're talking about places like Hookah Lodge, Longitude 131 Degrees, Sapphire Freycinet.
Wow, why are they so profitable?
Well, they typically have small room counts, around 21 on average, high barriers to entry to create something similar. Bookings are often made months ahead. All this leads to strong profits and, frankly, lower operational risk.
And who owns them? Mostly local.
Mostly domestic ownership, yeah, around 67%. But interest from overseas investors, particularly the US and Singapore, is definitely growing. The perception is shifting, too. These aren't just lifestyle investments anymore. They're seen as a distinct alternative asset class, attracting ESG and impact-focused capital as well.
Okay, so the industry structure is evolving, the market dynamics are shifting, and so are the leadership teams. We've seen quite a few key appointments recently.
Yes, reflecting how groups are positioning themselves.
Amanda Cottam is now Director of Operations Pacific at Levy Hotels and Resorts. Melissa Goslin is Cluster General Manager for Wellington at TFE Hotels.
IHG has appointed Lachlan Walker as Regional General Manager for Fiji and Pacific.
Sam Panetta takes over as General Manager of Sofitel Sydney Darling Harbour, and Geisel Sales moves up to Guest Experience Manager at Sofitel Melbourne on Collins.
And further afield, Nick Downing is the new GM of the Langham Custom House Bangkok.
In Japan, Manabu Kusui becomes founding GM of Hotel the Mitsui Hakone and Cluster GM of Hotel the Mitsui, while Yoshihiko Katseda is new GM of Hotel the Mitsui Kyoto.
And a big global role. Julian Hodebein is now Global Chief Sales and Revenue Management Officer at Accor. Lots of movement.
Definitely. These leadership shifts really set the stage for strategy execution.
Which brings us to our final major topic, technology, specifically AI.
Right, and this is critical. We need to talk about what Dr. Cornelia Walther in a Wharton article calls the AI efficiency trap. She argues that AI, despite all the hype about boosting productivity, is actually creating some significant often unseen consequences for workers.
Okay, the AI efficiency trap. What exactly is it? What's the cycle she describes?
It's basically a four-stage cycle that can really undermine human potential if we're not careful. Stage one, you get the initial productivity gains. Everyone sees that.
Right, the obvious benefit. Then, stage two. Managerial expectations rise. They see the potential, they want more output. Stage three. Workers develop a growing dependency on AI. They start feeling like they can't do the job effectively without it.
Ah, I see where this is going.
Exactly. Stage four is the trap. Diminished human agency and confidence. She calls it learned technological helplessness. It's a subtle erosion of skills, autonomy, and, well, confidence.
That sounds genuinely concerning. What are the deeper costs beyond just productivity numbers?
Well, the psychological cost can be huge. Even if AI saves time on specific tasks, the overall workload and pressure often increase. This can lead straight to burnout and mental fatigue. And economically, think about it. Competitive markets push for aggressive AI adoption. It becomes an industry arms race. Performance expectations go up across the board, but working conditions or pay don't necessarily improve alongside them. It can become a race to the bottom for employee well-being if not managed consciously.
So for leaders in our industry, especially as AI becomes more integrated, how do we avoid falling into this trap? What's the advice?
Dr. Walters stresses the need for very conscious, very intentional AI integration. It's not about just plugging it in. She offers a framework called POZE for leaders.
POZE. Okay, break that down.
P is for perspective.
Yeah.
Focus on the long-term strategy, not just short-term output gains. O is for optimization. Value quality and thoughtful work over just sheer quantity or speed. Z is for zeniths. Basically, cap AI-driven workload increases. Set clear limits to protect employees from being overwhelmed. And E is for exposure. Leaders need to actively monitor and protect employee autonomy. Make sure people don't become overly reliant or feel disempowered by the tech.
So connecting this back, it sounds like this efficiency trap isn't inevitable. It's more about how we choose to implement AI.
Precisely. It's a choice. Intentional integration that really champions human empowerment, that supports our teams, that can preserve innovation, resilience, and well-being. AI should be a tool to support and augment human potential, not replace or diminish it. It's about elevating people, not just accelerating processes.
That leads perfectly to a final thought for everyone listening. As the hotel industry continues its dynamic evolution, driven by both rapid expansion and technological breakthroughs, what does it mean for us to truly lead with both profitability and purpose, ensuring that our innovations enhance both the guest experience and the well-being of our teams? That wraps up this week's 5-Star Weekly Briefing. Thanks for tuning in and staying informed with the latest in the hotel industry. Don't forget to check out our 5-Star Conversations podcast, where Brendan Granger from Technology for Hotels sits down with the industry's most influential leaders to uncover their journeys, insights, and the future of hospitality. It's a must-listen for anyone passionate about elevating their guest experience and driving innovation in the hotel world. Until next time, stay well and stay ahead. See you next week.